of the in terms of a global handover. Another record high for the Wall Street, Amit.
And green everywhere seems to be the color of the day. Suyesh, good morning. US stock markets indices ended up higher on Thursday after retail sales data declined more than expected, raising hopes that the Fed will raise interest rates in the coming start cutting interest rates in the coming months. The leaders in the pack were Chinese chip stocks on Wall Street, specifically Naura Tech rose up 10%, Hygon Technology rose up 12%. Their US counterpart competitors, Applied Materials, rose up only 5%, Advanced Microsystems only 3.7%. But coming to the markets themselves, Dow Jones closed in the positive at 9.9%, S&P 500 0.58%, Nasdaq in the positive 0.3%, European market stocks in the positive at 0.68%, Hang Seng in the positive this morning at 1.76%, Nikkei at 1.71%.
All right, and as I mentioned, strong start for the Indian markets as well. We have opened above the 22,000 mark on Nifty, but we are seeing some bit of a volatility over there. We are, trading around that mark, and that is on Nifty. The mid cap and the small cap indices are also trading with gains this morning. The mid cap index is up about 0.5% in fact, and the small cap index, that's up nearly 1%. It's moving higher. It's at around 16,200 levels, and India VIX now that has seen a decline of about 1%. Remember, just a few sessions ago we were knocking at 16. Now we are very close to 15 sort of level. So good to see. Bulls will definitely appreciate that. And if you even look at the sectors, all of them have opened in the green this morning. Nifty Bank is trading about 0.2% higher, 0.3% higher or so. And look at how Nifty Bank has contributed to the rally and the recovery we have seen in Nifty since Monday. Nifty Bank, of course, has a weightage of about 30-35% on the index, and in the last 4 sessions alone, Nifty Bank has added close to 1.5%, and it had been facing resistance around that 46,000 mark. We have taken that out. In fact, as of 9:45 a.m. this morning, we were above the 46,300 level. The next resistance levels, as far as Nifty Bank is concerned, could come around the 47,000 mark. Other sectors that are also contributing to today's surge is, of course, Nifty Auto. Nifty Auto, remember, was the best performing index yesterday, and again, it's one of the best performing sectors today as well. It's up about 1.5%, and all the constituent stocks are also trading in the green except for Bharat Forge. We are seeing a gains of from somewhere from 2 to 4% in Nifty Auto stocks. IT pack is also trading higher. Nifty IT is up about 0.5% this morning, and we were seeing some bit of a correction in Thursday's trade in the IT stocks, but this morning they have opened higher. In fact, Infosys is leading the charge. It's up nearly 1.3%. TCS is also trading with gains of about 0.7%. And if you look at the other sectors that are in focus, of course, we are going to be tracking Nifty Pharma, because that has been a major performer for us in the last week or so. But let's also bring on board Mr. Rohit Srivastava, founder and market strategist at indiacharts.com. Sir, thank you for joining us here on First Take. Always a pleasure seeing you. Good recovery for the markets in the last 3-4 sessions. We are back at 22,000. Are we, breaking out, and is the record high the next level to track, sir?
So are we really out of the woods? That is the big question on the table. We've seen the market touch 22,124 in the month of January. In February, post-budget, there was a second attempt to get past that. We made a high of 22,127 almost. Around 2-3 points higher, and then it sold off from there intraday itself. And now we are, I believe, making a third attempt to get to that level. If you ask me, I don't think we will seriously get past that. Either we really touch it. Even if we do manage to close above it for a day, I would still think that this is just like an extension of an ongoing distribution phase in the market. because when we actually look at the broad participation over the last 2 months, it is reducing, and this rally is getting narrower and narrower. Mainly being driven. Initially, it was PSUs. Now it is like only PSU banks. So as the rally gets narrower, driven by only a few stocks or sectors on a day-to-day basis, we do think it gets to an extreme where it still needs to, give back and reach a point where it's more sustainable. So I think this is like a distribution pattern. Maybe we'll end up with a triple top near 22, 130 or so. That's what we are going to be watching out for. So not really getting too enthused by the bounce back that we've seen. But it does give us some very short-term momentum, for a day or two.
All right, and what's your opinion on the broader markets? Because the mid-cap and the small-cap indices, at least since October, we have seen one-day shakeout in both indices of about 3 to 4%. But the recovery has been equally strong in the past months. This time around, they have recovered, in fact, but the pace of recovery has been slower. So have things changed for the broader market, sir?
Yeah, so that is sort of why I said that it's a distribution. So if we actually look back. The first sector to be weak was, of course, banking. That's the obvious one. Next, we have seen this month we have seen small caps and mid caps weaken and not regaining the strength that they had previously. You are also seeing that to some extent, if not in PSU banks, I think PSU stocks across the board, there have been some very deep cuts in some of them and will probably not go back to the highs. So accordingly, this is like one sector at a time, couple of stocks at a time that are rolling off in terms of participating on the upside. And I think it's just the last man standing that is going on, which is why you just can't take a bet across the board anymore. It's become very, very selective. But that is by definition, dangerous because if you have to be so selective, then you don't know where you're going to be hit. How do you really trade a low probability market?
Morning, sir. I'll drive your attention to something that has been in the news, the PSU stocks. Now, they have had some correction after a big rally for the last 1 year. And then after the correction, last few days saw them rise again. But when I look today, there is a slight downturn in some of them again. So what is happening? And specifically some of the popular ones like LIC, which is again down, has been down almost 8% in the last 5 days. ONGC, ERCON, MMTC, the popular ones, they are still in the negative. So what is happening in the PSU space? Is the cash out going to carry on for some more time?
So it happens slowly and then, all at once. That is how markets always are. We have seen huge volume in this space, probably all-time high volume in terms of number of shares traded. We call that a buying climax, where everybody gets involved. The cooling off from a buying climax can take, up to at least 2 months before you can get another move to the upside. So you have to give it that much time in terms of consolidation or correction, whatever the case may be. So it requires patience. I don't think it's a time to chase. The chasing part is done. Now it's a time to really wait and let things consolidate and not try to chase these moves.
All right, sir, there are also reports that SEBI is asking IPO-bound companies to remove selling shareholders, including private equity and venture capital firms, from the decision-making process of the pricing of the IPO. What do you think is the rationale behind this move?
Well, it's interesting because, you've seen a couple of new age companies in the past get listed at very, very high valuations. Many times that's an exit game. And sometimes you can actually, play the valuation game by, having 1% of the shares exchanged off the market at a very, very high price, which is what investment banking does. And then we say this is the valuation of the company. That's something that SEBI is trying to get out of the way. And I think that's a good move if you think of it from a retail investor's perspective. So, the world goes in a full circle. You have to go back 20, 30 years to understand where all of this comes from. We used to be, I grew up at a time when there was something known as the CCI, the Comptroller of Capital Issues, which used to decide the price at which an IPO could be done. So even the company could not decide what would be the IPO price. It was a decision made by the authority. You could, of course, suggest your price, but finally the authority would say whether it's okay or not. And if you suggested a higher price, they had their own formula above which you could not really price it. So they had a cap. So this is what the world goes to if you start overpricing yourself. We gave freedom, I think, after 91 reforms. We said, okay, you're free to price your public offer, and that has led us to a point where the prices are getting astronomical, and people are being made to believe that company even at a 50 times book is worthy of investing in, which is what I think SEBI is not trying to get a hang of. So that's a good thing.
Right. Thank you, sir. Thank you for joining us here on News 9. Always great insights from you.
Thank you.
But with that, let's take a short break. On the other side, we have the listing of Entero Healthcare Solutions, and Kush Bora of kushbora.com joins us.
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50 flyovers in Bangalore city. If flyover is a solution to traffic problem, Bangalore should not have traffic problem.
According to TomTom Traffic Index 2022, Bangalore is ranked as the second worst city in the world when it comes to traffic.
The speed limit at the ORR is 80 kilometers per hour, but our vehicle has only moved 10 kilometers per hour.
What Bangalore needs is a surgery, but what we have been offered repeatedly are band-aids.
Only on the world's first news OTT. News 9 Plus, ahead of the curve.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News 9 Plus. Download now.
From Fragile 5 to Top 5, from a laggard to a leader, India under Modi has reimagined the world order. Presenting the second edition of TV9, What India Thinks Today. Summit theme, India poised for the next big leap. Listen to Prime Minister Modi unveil his vision for Viksit Bharat at News 9 Global Summit, a TV9 network initiative.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की, अभी डाउनलोड करें।
Welcome back. You're watching First Tick here on News 9, and the markets, they are trading in the green. Nifty is back around the 22,000 mark. In fact, it's trading above it, just marginally above it. It's up about 0.45% as of 10 a.m. this morning. And the Sensex, the 30-share Sensex is also trading higher. We have reclaimed 72,000 mark in the opening trade today, and 72,300 is where we are at on Sensex as of 10 a.m. this morning. Mid cap and the small cap indices, they continue to stage the recovery. They have in fact pretty much reclaimed all that was lost in Monday's correction, the Monday's correction where we saw a 3 to 4% shakeout in the mid cap and the small cap indices. Both of them are in the green. Mid cap is up almost 0.5%. The small cap index is up 0.75%. Volatility index is also on the decline. Amit, remember we were knocking at 16. Now we are down at 15 sort of levels. Although we are seeing some bit of a spike since the morning trade. It's up about 0.6% as of 10 a.m. But with that, let's also bring on board Kush Bora of kushbora.com. Thank you for joining us here on News9, Kush. Always great seeing you. And Nifty is of course back at 22,000. But the last time we spoke, you recommended booking profits around 22,100, which I remember is the upper end of this range the market has been trading in the last 3 to 4 weeks or so. Is that still the view?
Hi, first up, a very good morning to you and all the viewers. Always a pleasure being here. I'm so glad that you remember that markets did see a bit of a dip around those levels, didn't they? Now the view's changing slightly. My view is that not only will we be knocking at the doors of 22,200, we'll perhaps break them open and head towards 22,500. So we're looking at that level now. I think markets have spent enough and more time in this range, and the 22,100 kind of upper band held on for a while, a couple of exceptional days aside. See, the only missing piece in the entire puzzle was the Bank Nifty. And now if you look at the Bank Nifty setup after a month's hiatus, probably a little more than that, Bank Nifty is now trading above its 20-day moving average. That's the first litmus test of a trend reversal. I think once the Bank Nifty also starts to participate, or at the very least, if it doesn't drag the Nifty down, the constituents down, then I think we're looking at the 22,500 mark by the end of March. So that's what our view is. In fact, even on Bank Nifty, we're getting constructive. 48,000 is the level that we're looking at on Bank Nifty.
Good morning, Kush. Now, keeping to banks, I'll talk about Axis Bank. Mr. Subramaniam Swamy has accused them of a 1,500 crore scam charge. The bank has issued clarification that it has obtained all the necessary approvals and regulatory approvals, and the bank believes that no material impact will happen on the shares. But when I look at the stock itself, both of Max Financial Services, which is the parent company of Max Life Insurance, which is a script that has gained almost 30% in the last 1 year, has been in the negative almost 3.5% in the last 5 days. Axis Bank 24% gains in the last 1 year, in the negative last 1 month almost 4%. Today it is down almost 0.5%. Where do you see Axis Bank going? Do you see a major correction in both these stocks, and how do you see this playing out?
So let me put it this way, all the news aside, Axis Bank was anyway in a bit of a consolidation mode. We had seen a bit of a double top kind of a formation around the 1150 levels, and the stock is has seen a sharp bout of profit booking, where it almost touched the 1000 level also, about 1020 and thereabouts. From there on, we are seeing a recovery. So all in all, the stock has anyway been under pressure. If you ask me very specifically about the news, let me just clarify. I don't have the entire details on this, but any kind of such news, assuming that the bank does come clean, we know what's the history, as a guide that turns out to be a buying opportunity. So that's my 2 cents on the news. But as far as the stock goes, it's already been in a range. So someone is now looking for an up move or a fresh entry. I think 1020, 1030, the recent lows that the stock has made, could act as your support zone. Be a little patient. I think the stock could now head towards the recent highs of 1140, and once that is taken out, we're looking at 1200 levels. But that seems like more of a positional bet, given how all the private banks are under a bit of a pressure, and all the all the juice and all the rally is in the PSU name. So positionally, Axis is looking attractive, but not from a momentum play at all.
All right. But Kush, as we speak, Entero Healthcare has listed Let me just tell you what the listing price is to you and our viewers, of course. It has seen a muted listing, a cut of about 2% on the final issue price of 1258. Entero Healthcare Solutions has listed at around 1229, and remember the subscription was also muted. In fact, it was the least subscribed IPO since HMA Agro Industrial IPO back in June 2023. Kush, coming to you, any view on Entero muted listing? Perhaps one can get onto the stock.
Well, very honestly, I track stocks from a derivatives and a technical standpoint, so a very limited view on this one, none perhaps.
Fair enough. But I wanted to talk about HDFC Bank as well, because, at least yesterday, one of the major drivers for the index, for both indices in fact, was HDFC Bank. It surged by about 2% or so. And I think it's very important for the markets to move higher from here on, that HDFC, if it does not even rally, it finds some bit of a support. So what are the, the levels that you will be tracking as far as HDFC Bank is concerned, sir?
So first up, let me just put out a view very clearly. We think HDFC buys and accumulates. We've heard the old adage where, if you want to park your money in the bank, you'd rather buy the share of this bank rather than put the money in, in the FD of this bank, right? That's how I still look at it. What happened recently with PSU banks and the railway names, in a very short term, as we call the recency effect, will explain what is happening with HDFC Bank on the broader term. Let me take 30 seconds to explain. When we saw those 5, 10, 10 to 12% kind of dips on these names in the last 2-3 days, everyone started questioning whether this rally is sustainable, whether the story is over, and it was just a 2-day correction. And most of these stocks are back to their old prices, if not higher. Now, what happened with these names over the short period of time is happening with HDFC Bank over a slightly longish period. Let's not forget the kind of darling it has been, the kind of returns that it has made. So take it as a long-term bet. Start your SIPs in HDFC Bank from here on. As far as the levels go, I think 1350 is a very strong support zone. Once that is broken, perhaps, we'll look at, if we have to revise the view. But 1350 is a very strong support zone. And in any case, the stock is off its highs from 1700 odd levels. I won't rule out, a good 15 to 18% kind of an up move in the coming year. So for me, HDFC Bank is a very attractive buy at these levels and will continue to remain so for at least 1350 odd levels.
All right. Could rally about 15 to 18% in the next year. Strong support at 1350, and that's the view on HDFC Bank. But Kush also wanted to pick your brains on Mahindra and Mahindra, because that stock rallied by about 7% yesterday. Of course, brilliant set of numbers as far as the earnings go. But compared to the peers, Tata Motors and Maruti Suzuki, it has been a laggard in on the 6 months and the 1 year price charts. Is Mahindra and Mahindra finally seeing a breakout?
Well, the way I look at it, it is already, in breakout territory. The main resistance zone for the stock actually was 1730. If you look at it from a weekly perspective, December, the entire month, it was like a pinpoint level. 1730 was the level that the stock wasn't able to take out, and then went into some sort of consolidation mode. Even then, I stuck my neck out and said that, it's a buying opportunity. Let's not forget the rally that the stock had seen, because it was only 1st of November where the stock was about, 1400 odd and then rallied to 1700. So it did see a good 20-30% kind of an up move in, a month and a half. So a big stock like that correcting, rising so much and then going into consolidation is a healthy sign. We're very constructive on Mahindra and Mahindra. 1800 was our immediate target, that's achieved today. Going forward, we're looking at an 1875 and 1925 kind of a level on Mahindra and Mahindra. However, as you said, Tata Motors, we rate it slightly higher, above M&M. So if one was to take a punt or a trading bet, I would say Tata Motors will rate slightly higher over M&M. Maruti, maybe, between the three would rank third. So Tata Motors, M&M and Maruti, that would be a pecking order.
The Tata Motors, Maruti and Mahindra that way. But what are your picks apart from that for the investors today, Kush?
Sure. So a couple of them. since we are so bullish on the banking space, Bank of Baroda is one stock that has not really participated, in the way the likes of Canara Bank and SBI have. So we think Bank of Baroda will play a catch-up game here. On the upside, we're looking at a near-term target of 282 and 288, and 270 is a strong support zone. Also, the power pack is still quite powerful. We think this is a sectoral churn. This is a sectoral rally that is happening. So Swan Energy, this morning we had a call of Swan Energy with a target of 755 and 770, and 725 was the stop loss. Given that the stock has already achieved its first target and going closer to the second, my suggestion would be to hold, or even if someone wants to enter this one, a fresh entry can be made with a stop loss of 745 and the next target of 800.
All right, those are the stock picks from Kush Bora. Sir, thank you for joining us here on News 9. Always a pleasure speaking to you.
Always. Have a good day.
But before we wrap things up, let's look at how the markets are doing, and we are in fact moving higher. Nifty, as we speak, has in fact moved higher from 22,000 levels, and it's very close to its day's high, which is at around 22,030 levels. So we are just about 11 points shy of it. Sensex is also moving higher. We are very close to 72,400, and that's for Sensex. The broader markets, they are pretty much on their way to recover all the losses that we had seen on Monday. And remember, we have been talking about this since October. There has been a day of shakeout for the broader markets where both indices have given up 3 to 4%, but the recovery has been swift. This time around, the recovery has been slower, but it has happened. So keep an eye out on the broader markets. There are obviously valuation concerns, as was expressed by both Rohit and Kush. But looking at India VIX, that is also declining, and India VIX is at around 0.88% higher, in fact, at 15.36 levels, and that is as of 10 a.m. this morning. But looking at some of the sectors, most of them are trading in the green. In fact, all except FMCG. The banking pack continues to take the markets higher. Nifty Bank is up almost 1,600 points or so in the last 3 sessions. We are back above 46,400. 47,000 is a key hurdle for the index for further upside, but a clear breakout there. The index is up about 2% now, this week. And the auto pack, now that's the best performing segment for the market. It's currently up around 2% or so. FMCG is a drag on the market. It has been for the past few sessions. The earnings were rather disappointing. A lot of the market participants were expecting to see some bit of some green shoots of recovery as far as the rural demand is concerned, but that did not really happen, and that was particularly disappointing because remember, the wedding season and the festive season had been pushed pretty much by 15 days or so. So it was falling in that quarter, but still a laggard rural demand, and FMCG stocks are trading lower. But all in all, a very positive texture for the markets. But that's all we have in this edition of First Tick. But although we are counting down to News 9's Mega Global Summit, what India thinks today, Prime Minister Narendra Modi will deliver the keynote address at the summit. The theme of the summit this year is how India is poised for the next big leap on the global stage. Stay tuned to watch this TV9 network initiative on February 25th and February 26th.
From Fragile 5 to Top 5, from a laggard to a leader, India under Modi has reimagined the world order. Presenting the second edition of TV9, What India Thinks Today. Summit theme, India poised for the next big leap. Listen to Prime Minister Modi unveil his vision for Viksit Bharat at News 9 Global Summit, a TV9 network initiative.